Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Thanks for stopping by today. I stream live Monday through Friday, 11:30 to 1 p. Eastern Standard Time, and this stream's about integrating Bookmap order flow tools with auction market theory using a volume profile in the intraday developing time frame. This stream's about building trade plans. Also, the Trader Lab is a open community. It's designed for developing traders of all levels. Since we're developing through our continuing careers, so you'll never stop trying to get better or looking to refine your process no matter where you are. So the Trader Lab is this open community, and you're all welcome to visit the Trader Lab, and there is no cost. And it is really about building out the business side of trading, how to potentially build a career in the trading business. The trading business is not a video game. It is not a click the mouse, let's have fun, unless, of course, that's your objective. But for those who want to have a business and want to have an understanding of how this business works, that's what the Trader Lab is built on, and you're all welcome to visit Trader Lab. If you're visiting in YouTube, there is a link in the bottom of YouTube, and you can access all the resources of the Trader Lab, which includes statistics, structured trades, 60 PDFs, and a library of webinars on the process that you see here daily in the stream. And like everything, past performance is not indicative of future results, and your mileage may vary. Here's the thing about trading, and most of us, you cannot duplicate what someone else does. It's almost like dancing in a way. You can learn the steps, but you have to find your own rhythm or groove. And trading is very much like that. That's why sometimes we might have scalpers and other times we have swing traders. And what is the difference between them? Well, it's psychology, risk management, and a sense of comfort that you can derive from your approach. Very often, everyone can see some mystic who can, quote, predict what's going to happen in the market. And naturally, if you've been doing this for more than a half hour, you'll realize that nobody can predict anything since the outcome and the participant behavior is random. But what we can do is we can get a sense of the condition of the market, and that is called context. And then if we can define the conditions which say we are in a certain behavioral condition based on market mechanics, which you will see here in the stream, then we might be able to at times get in alignment. And that's the goal of TraderLab, help traders get in alignment and then have structured trades that they can reverse engineer in order to execute and participate in this environment. So that's what this stream is about, and I'm going to take you through it today. And feel free to post questions in YouTube or the Bookmap Discord Trader Lab chat. And also please give a thumb up along the way if you find this information helpful. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Please grab a pen and a piece of paper. I'm going to be showing you some levels and giving you some statistics. And of course, you have to vet everything for yourself. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. It is really about understanding how the market works, why it does what it does, and how you might get in alignment with it, and also integrating order flow with a high-tier tool like Bookmap to help you see, shall we say, where the rubber meets the road and to get into more of the nuance of order flow, absorption, iceberg, algorithmic behavior, stop sweeps, and the rest of it. So there are different levels or dimensions, if you will, of where we see this interaction. So the profile, which I use, I do not use indicators. The profile is basically, what it really is a chassis. And that's really how I see it. It's something to understand what happened in the market or what is happening, and then try to determine the conditions. Now I'm going to try to show you something, a higher time frame chart. It's important because before we start our day, we have to look at what has happened recently. Now, I'm going to try this again. And again, apologies if things get ugly. I'm moving things around here which could be problematic, and I hope you can see this okay. This is the I posted this morning in the Bookmap Discord TraderLab chat. Remember, the TraderLab's a community, and I'm going to show you some of the things that are in there before the day starts. Now, Friday, this 19.5, the breakout of this consolidation. Now, this is last week, and remember, we had the market was closed on Wednesday last week for Juneteenth. So this is the previous week's consolidation, or at least 3 days of consolidation, 19.5. That created this level. So 19.5 is a breakout, and right here is level. Yesterday or Friday, we came down. This is the low of the day. So what we were looking at on Friday was come down, take this low out, which was Thursday's low, get more shorts in the market. Write this down. Market goes up to go down. Market goes down to go up. Now, up to where is always the fun part. So this was the low of the day. And if you guys remember in the stream, and you're in TraderLab, you can review these streams. We had these on our charts, and that was the longs. The target was up here, this yellow line, which I think was 44 or somewhere in there. I can't remember anymore. 44.5-ish or so. And this was resistance here. Now, for today, and the way we closed on Friday, this is called balance. Balance is really two sides. Now, what did we have Friday? Option expiration and going into the weekend. So are we going to get new positions? Well, a lot of traders are going to flatten out. So it's possible nobody really runs with the ball. Now, the thing is, this is a key level. So we know that's a key level. Write this down. Roughly 19.5, 20-ish. By the way, levels are horseshoes and hand grenades. Now, the next level we need to know, and I'm going to switch charts. So what does this tell us, by the way? This says trend day up on Monday, continuation. This is the day we gapped higher in the ETH and sold off. Now we get the sell stops under here. Remember, market goes up to go down, and the sell stops under here. And once they're out, the shorts become the buyers. I hope that makes sense. And again, we always hope it makes sense. Hold on. So let's see what we have. Here's some important numbers. 55.30 was support in the ETH. 55.3350 is a target. 55.5450 is a target. And then the current ETH. What is the context? Mean reversion balanced. So this is what's going on in the TraderLab. Notice the behavior. Rotated lower through the, then hit the HVN below, and mean reversion reverse. Potential mean reversion to the naked volume point of control. And I'll show you where these are. Here's the settlement. Here's the naked volume point of control. Key is the context alignment, and you have to anticipate these things. This is what trade plan is all about. Patience. Market was balanced on Friday, two-sided. See who might take control. Patience is very important, and so is trade plan. And this is what's going on in TraderLab, and all of this here, this is around 9 a.m. So all this is ongoing. This is the community of the TraderLab. And I post in here, and other traders post, and we all work together to do better. So, and you can see there's a lot going on in here, charts and things, you know, so this is how we grow. This is how we get better, and structured trade. So anyway, I'll move this back around. And now let's go and look at our levels, hopefully. And I can't see your questions if you're posting, but please do. I will get to them. Okay, now let's look at those levels on Bookmap. Yesterday's high. Hold on. Which is a target. This was a single. This is a target. So we have 55-ish as a target, and this is a target. It's called a single. It is a separator from a distribution from when we fell out on Tuesday on that reversal day. So this is an outside edge. So we could come up here and rotate, which is currently what I think we're doing. I can't look right now at my other charts. However, there's a high probability we'll get through here. We may just peak above it and mean revert back down, or always like the or in trading, or get to 64-ish, which is the next target up, if we can get past this, other than just a tease. So let's look at the other side. Settlement, negative volume point of control. This is the retail price from Friday, overnight mid. So essentially, this is a high probability target. These are high probability targets, and we'll see about the rest of it. Let me just go down to the downside, and then we'll start. Now, these are structured trades, which you're going to see. There's one other thing I have to show you. Remember yesterday's low. Remember I pointed out just a few minutes ago, 19.5 was a key location. Look where the ETH low tests. What might that say? Let's take this one piece at a time. Too low. And it's like, well, let's go shopping. Is this price really too low? Because the auction is shopping. You really think about it? You could throw an S&P in the cart when it's down here, if you think it's on sale. Well, what do we know? Let's look at the language of the market. This was the retail price from Friday. Retail means, when I say retail, I'm talking about shopping now. You know, your can of tuna is $1 a can. Everybody buys tuna at the retail price, so it creates high volume. But there are times when the market goes on sale. Now, it isn't up to us what's too low. It's the perception of the participants. But what do we know? It was too low yesterday, and this is our outside edge in the intermediate time frame. That's the higher time frame chart I showed you. Well, that's still too low, Lewis. It's on sale. Okay, well then let's come back here. That sets up longs. Okay? That's before the door opens for business. Is everybody tracking so far? Very important you get the lay of the land. Are you guys tracking? How we doing in YouTube? Everybody conscious this morning? Have another cup of coffee. Okay, guys. And by the way, if you're visiting in YouTube, thanks for visiting TraderLab today. And please give a thumb up. And remember, these streams plus all these statistics and everything I'm going to be discussing are available to everyone at no cost in the Bookmap Discord TraderLab chat. Now, I'm going to give you a few statistics, fun facts to know and tell. There is a 83%-ish, and you have to vet and reverse engineer and confirm anything you hear from anybody. There is a 83% probability we test the overnight volume point of control, and 83%-ish probability we check the overnight mid. The previous close or settlement, 72% probability. This is coming in. The previous point of control, 70%. So all this has a high probability. The first hour high, 69% probability, which is going to be up above us. We don't know at the time. And 49% probability we get to the overnight high. So just to start out. Okay. So, and there's more, but that'll keep you going. Let's get into real time. Now, this is the RTH open. Now, what we know is in the ETH, we are in balance. That means we're rotational. We're trading two sides. So if we suspect that we want to get long, we're going to be looking for longs. Of course, the joy in trading is where, right? And this, unfortunately, is our nemesis as traders because we're trying to locate outside edge. Now, what I always suggest, and guys, please take notes. What I always suggest, and this is not, by the way, take notes if you're visiting, but also if you're in TraderLab, take notes. It's to reinforce unconscious competence because we want to be consciously competent before we can become unconsciously competent. So, and when we start trading, we're really, really incompetent. So let's start from there. This is called a variable high volume node. I made these up when I was first doing this. I learned market profile initially from Peter Stottlemyre at the CBOT. And I really thought I landed on Mars with that thing. And I, at the time, was still indicator math based, backwards looking, curve fitted, you all know what I'm talking about. So I thought I was, since I'd spent so many years with indicators and then trading systems, I thought I'd be pretty smart. And I was real smart. I just set myself back another year or so by mixing things. Because I thought early on in my career that more inputs created more certainty. And what it actually did was the opposite, but I didn't understand it. I didn't realize I'm in a gaming business, not in the prediction business. So I was looking, of course, to be right, which is predicting. How about the way to get to be, quote, right is not to work towards being right, but to accept the randomness and then build out something that has a statistical edge. It's not the next trade, it's all of them. Casinos built their business that way. It works really good for them. So it's really about emulating an already proven business model, which is gaming theory. So we'll start with this. Open, we see sellers right away. Okay, I guess we're not going to buy this. This is too high. This is your retail price. Think of this like a store with shopping. The auction is shopping. That's what really an auction is. What's too high? What's too low? Let's bid on it. Well, nobody wants to buy it at this price right now. How about this price? Two possibilities. If it's too low, we're going to come up here. If we take this out, we go to our statistics. If it's still too high, we go low. Let's see. Right here, I took a long this morning going for this and this. I did not get it. Just show you the joy. Going for this. So this is a long. This is a long. This is resistance. And I'm playing statistics. So I'm just trying to get outside and get it. So I was going for this. And right here, I was unable. I can't tell you how excited I am to share that with you. I got out of the trade. So, and I got out because I saw these guys get trapped and I saw the sellers and I came back and that was it. I just said, no. I saw this come in and when I saw this, I said, should have held it. That hindsight kind of thing. But look what happened. So then, so that trade, I could have done better with it. I want you to know. But when I have conflicting information like this, and I'm unable, so there's a little emotional stimulus going on, and then I'm saying, well, I got a target here. It would have been more prudent for me to take the first target, but this is the retail price. So I felt pretty comfortable that because these have high probabilities, okay? Overnight mid, let's remember what the statistic is, and then we'll move on, is about an 83% probability. And then the point of control is about 70. So this one is higher, but in mean reversion, we're looking to come back here. And the overnight volume point of control, let me just see if I got my head screwed on straight here. Where is that? Got to find it. Was 37.5. So I was looking at this to come up here 37.5. So I was thinking I'm just letting you know, long to here to 37.5. That was my primary trade, and then maybe out the top. So anyway, could have managed it better, would have scratched it, instead bailed out of it. Just didn't get anything for the trouble. Then we come out here. Now, so here's my sellers. I look here. Now there's one other thing. Okay, I see this and I'm thinking we're going to get that rotation, which is we did, but that was it. Now we come back down, they pull. There is some right here. I see some absorption and then we break through. So right here I'm thinking, oh boy, this is no good. You know, because now I'm in that state of what's going on. So I come down here to 26 and I have nothing right here right now. Let me just show it to you. So this is what the profile looks like. Too high. By the way, look where it went, right? See, it got to my target. So I didn't play that well at all. Anyway, back here, I come outside. I got to look and see where I picked up the longs again. Hold on. I've not been short today, only on the long side, because that's my thesis based on that higher time frame chart I showed you. So this kind of sets everything up for me. Now, I have to be flexible because if things change, I have to change. So at the moment, this is too high right there. So it's in alignment with the auction. If this is too high, what might happen? Counter rotate. This is the language of the market. Now, the part here is problematic because where's the outside? You know, and this is a condition called mean reversion. It's the same condition we had in the ETH. And what that is outside in trading. What's hard about mean reversion is where's the outside, you know, and this is the problem. So in TraderLab, I always talk about mean reversion is a separate trade plan. It is not open field running. I mean, the market can get directional in either direction and then go into chop. And the way chop tends to operate is if we know what a retail price is, which is this yellow line, and this moves around. So currently right here, consider this the retail price. This is too high. I'm not paying that, right? In alignment with that. Friday's retail price. And now this is the developing retail price. And then where is it on sale? Now we know from the ETH, this was the low of the ETH, and this is yesterday's low. We didn't take it out. Does that say something possibly like this was our target for the downside Friday? There it is. And the ETH tested the same level, and we're in the overnight volume point of control is around 37. This is the language of the market. So I know this might be too low. I know the retail price was 37-ish in this last auction, and this is too low. I know from Friday, this was retail. So I'm already above it in the ETH. So if I come below, I can come back here and I can go to 37 and up north towards our targets, which I'll come back to later. You've already seen them. So anyway, I have to find an outside edge. Let's try to find an outside edge. What does an outside edge look like? Let's go take a look. Now, what do we see here? This is like a outside edge, micro high volume structure right here. High volume, chop, 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 chop is the volume. You see the volume there? That's too high. Now, I don't know. Break away from it. So I'm not paying that. They are trapped. They were absorbed. Chop, chop, chop here is an auction. I'm not paying that. Yeah, but it's on sale. But if you can't get over here, then everybody who's long goes, where's that exit door? We'll see you later. And we come back here. That's called mean reversion, top down. And then the market is long from the open, and the opening swing, which is here, has sell stops under it. You have to mark that. And then we take those guys out. Thanks for playing. Broker sends you a gift basket. Now, how do I get long? Well, I think or suspect, that's all you got, that we have the low in already in the ETH. So now I'm still sticking to my plan, which is to get long. Where do I get long? Do I get long here? Where do I get long? Wouldn't you like to know? That's my plan too. I see absorption here, buying iceberg. So I'm looking at this, but I'm right here. That's no good. I'm too close to the mean because we're in a condition called mean reversion. I see my seller. I see this buyer. This is like a drowning buyer comes up for a gasp of air. I'll see you later. Down we go again. Volume is here. So here I'm looking for a possible long right here. I see my buyer, and now I'm looking for a retracement here. What happens? Sellers go right through it. It's like, maybe not so much. So now let's look over here. I have what's called a high volume node there. So this, I'm going to mark it. Now, I'm going to go into minutia here, and I hope you find this useful. This is using the auction. And what I do, and I'm not saying it's the best thing to do. I don't have an opinion, you know. This is like finding what works for you. Right in here is the volume, and you could see it there. This is like chop, 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 chop. If I break below it, it is now resistance. So I'm going, well, that didn't do it. Okay, but this is too high. There's my seller. There's my test. Now, for this to go higher, I've got to come back above it. I don't do it. I see this in the order book. Uh-oh. Now what? Let's watch. This is resistance. What do I have down here? Another high volume structure. Let's take a look at this one. Now, I'm looking for a long, and I'm telling you, I am teeth are chattering. And why? Hide. Who's hide? It's the lunatic that occupies my brain, the fearful one. And fear sometimes is appropriate, especially if you're in a burning building. Time to get out. So when this comes up and I'm looking for longs, now here's another area. So I see my seller here. So I've got my volume here too high. I come down. As far as I know, it's going to zero. How do I know? I don't. I have this. Let's look at this. This was absorbed here, and this was absorbed by the sellers. This is absorbed by the buyers. These guys get trapped, new leg down, they are on the hook. Sellers in this leg, going to zero, Lewis. Buyer takes a shot here, has to clear this volume, which is in here. Too high, trapped. Sellers again, going to zero, Lewis. Watch. So I'm looking at this and I'm going, I got to look and see where I actually got long here. Hold on. Sorry, guys. If I can do that. Hold on. Yeah. Okay. So I'm looking now and I'm going, okay, I don't know where this is. This is the part of mean reversion. If you have problems with mean reversion, which is everybody, come to TraderLab. Here's my volume. There's a buyer. I'm going, okay, now I mark this high volume. And this is very nuanced. These are trapped. This guy is trapped here. There's my sellers, and it looks like we're going to keep going. Right here is my support. This is my resistance. I've marked them out. Watch. Buyers come up. Now, right here, I'm looking at these sellers. Here's all my sell delta here. So these are all where the shorts are. And remember, the delta reflects the initiative sellers and sell stops, market orders, in other words, the aggressors. So aggressors show up as stops because they're market orders and sellers, initiators. And that's a mix. So right here is support, resistance. I break above it. These guys now are potentially on the hook. Watch. Buyers, I get long here. Stop goes under here. I am unhappy about this, but my goal is to come back here. This is mean reversion. If I can get through this, then my next target is going to be coming back here and to clear it. So I'm scaled. Watch. There's more. So we have stops at yesterday's high, right? And there's more. So this is laid out. Now, 55, this is an area to observe. It was a target from Friday if we had gotten through the high of the day. So, and this is the next target here. This is all laid out, and it was on the chart and discussed in TraderLab prior to the RTH open. This is the next target right there. And that's the current high of the day. So that was the long. Now, what are we doing? Well, for me, target. Now, the interesting thing about this is if I can get through this and we have a statistical probability that is high that we will take this out, 64 is the next target-ish, not a recommendation. However, there's another piece to this. It appears, since the higher time frame is, quote, bullish, theoretically, that we can, of course, either continue higher or not. This is the RTH all-time high. This is the ETH all-time high from Thursday here. In the ETH, this was the RTH. So these are still targets, but this is the next obstacle, 64. And right here is key. We can either pop out, come back in, and mean revert, come back here. Let me show it to you. I already know the next trades. These are not recommendations. So it's either get through here, get to here, keep going, get through here, get to here, reverse, or just come up here and reverse and come back here. Those are the next trades. They aren't recommendations. It's all subject to how it all plays out. I'm going to come up for oxygen, answer any questions you might have, and remember what we're looking for. This, potentially, to come through here. I believe, based on the current conditions, that I can't say the low of the day is in, but the low, since we tested Friday's low and held it like to the tick, pretty much, it sets up the longs. What we don't know about the longs are we done here and we're just going to slosh and build up more energy, or are we going to continue the squeeze? So it's, again, where to? Here to there, or there back to there. You see, maybe there. So in a trade plan, you need to anticipate what might happen and where it might happen. We don't know what will happen. So if we have locations, and this is what the auction is about, you anticipate them and you wait for them, if that's your plan. So that is pretty much what TraderLab is. It's about trade plans, auction mechanics, how the market works and what it might do, and hopefully where it might do it. And then all the work, all the research, everything is done outside of real-time trading. And I was posting in the TraderLab this morning, not only the trades, and I don't call them, of course, but I do point them out because these are structured trades and they're available to all of you at no cost on those 60 PDFs. You can download that link in the bottom of YouTube. We'll get you over there. And then you wait. And the work is done outside, not here. It's not done, what do I do now? This is not the question you ask yourself when you're trading, because you're really captured by your chemicals in your brain, the dopamine, the fear, and all that. All those chemicals are surging in your body, right? Adrenaline, crazy chemicals. So you have to make your plan up in a rational moment, not when you're in a potentially somewhat irrational, chemically triggered fight and flight and all that other stuff that is active when we actually trade. So that's why the work is done outside of trading hours, so you know what you'll do. So you would know how you would manage this. By the way, let me put this in here. Variable high volume node. This is I call these high volume areas, they're shopping experiences. If it's too high, what'll happen is the market will not pay the price. I'm not paying that. And they leave. And give you an idea, if I cross above, where is resistance? Look to the right. It's there. This is auction market theory. Where did we come? Right there. You see? Why couldn't we get above it? Well, too high. I'm not paying that. This is you going to the store to buy S&Ps. And you see that the price was up here, and then they lowered the price. Well, the shoppers, which is the buyers and sellers, come back to this. Well, it was too expensive. Nobody wants to pay it. Let's be sure. I'm not paying that. And notice what comes into the book. And look what's going on here. So this is trading in fractals. This is understanding market mechanics. And there's a little more to this, of course. I'm going to show you something. At 9:30, the first hour's high, wherever that is, which is, where's the IB high, guys? I can't see it on my. You guys give me the quote. 58.5. Thank you. Oh, yeah, fine. Thanks. This is the first hour's high. This has a high probability, past performance not indicative of future results, of getting taken out during the RTH at some point. It's roughly 70%. Past performance not indicative of future results. You got to read. But this is the obstacle. So we have a bit of a conundrum. So there's almost a 70, did I say 70%-ish probability? Yeah, more or less, 69% probability we're going to take this out somewhere during the RTH. And of course, we don't have to. This is more significant than that because this is auction-based. This is only statistically and time-based. This means more to me because this was created by participant behavior, and this is just clock behavior, different and lower on the hit parade. For me, the priority of input always is the auction based on the participant interaction, not this. So you have to take things kind of in the sense of priorities. And there's no right way. If you're in a random environment, we could just as well take out this probability as take this out. And they're both the same thing in a way. This is more important because it was created by the participants when we fell out of on Thursday and we did the Acapulco cliff dive, took all the longs out. This was a divider between two distributions. Thursday was a what's called a double distribution day. And double distribution, this is what a distribution looks like. It's this kind of rotation. Well, basically, if you go look at Thursday and you look at a profile, you'll see there was two big distributions. One, and then it broke away, and then it started another one. That meant that the one on top was too high. This was the dividing line between those two big distributions. We had rejected everything above here on Thursday. That's important. That's why it becomes a target coming up. So this is like an outside edge. And if we get through it, that's what sets up the next targeting, which is 64 and then this. So think of these like an outside edge or a low volume area. Looks like that. Think of this, a high volume area, which was that location. I'm referring to Thursday. And think of this as the outside edge of the high. So what you're seeing here, this kind of behavior, is what represents this, except this is from Thursday, and this was the outside edge of this distribution. So it's the same as that, except it's where we divided the two of them. I hope that's not confusing, but you can learn about this in TraderLab. So that's resistance. I get through there, and statistics say I have a 70% probability-ish So we're looking for that, but it doesn't have to happen. If we come through this, it's very important what happens here. If we come through this, this is the next target, but it's also possible. All we do is come above this high, take out buy stops, and if there's no buying above here, we then look for mean reversion. I'm letting you know what the trades are before we get here. And that's based on structured trades in TraderLab. So, too high. So you notice what we're doing, this chop, chop, chop. So this is called balance. So this is too low. Now we're doing this. Now there was a couple other trades in here I pointed out. Where's this one? 930. I want to show you these because we have structured trades that are floating around in here. Let me see if I can find them. VWAP to VPOC. Nani, we were talking about VWAP to VPOC, and I think there's 2 or 3 of those structured trades in here. I just don't remember. I took them myself, so I don't know. Okay, this was our long, I believe we were talking about, right? This is too low. We get a pullback to here. This is long in the TraderLab to here. And I think there was another one. These are called VWAP to VPOC. This is structured trade in TraderLab, here to here, and then you're going for this statistically. So you would get your scale, and right here, this is a problem here. So here's what you get. Retail, so the trade's there to there, structured trade. This shifts down. This is what I call warning Will Robinson moment, because this might be too high. So I have this now is support. You see it? This here is resistance. So if I hold this, I have to extend up right here. And what do? We break down. This trade's over. What are we doing? Mean reversion. So this is now this is mean reversion. I haven't seen this. I haven't been paying attention now. Let me look, see if I took this one. I can't remember. 950. I have to go look because, yes. Amazing. 950. And these are trades I'm not saying anybody should do this. I'm just going to point out these trades. Now remember what we're trying to do here. We're looking for the first hour's high. We have at 9:30, that's fixed, which is here. So the current high of the day, we're looking to come outside. Not that we want to, but that's the condition. Where do I come back? Settlement, naked volume, point of control. I'm above these areas. And I'm looking to get long. So, and I don't know. Let's look at the microstructure. And what time did I get long here? Sorry, guys. And sometimes I got to tell you, I wish I could enter better because, we're all trying to get better. I'm trying to get better. I'll show you this trade though. Sorry, I'm trying to find the price. Okay. 40. So I come outside right here, and this is hard. I just want you to know. I'm above the naked volume point of control, which is retail price from Friday. So this is like what S&Ps were going for this. I'm above the overnight mid. This is settlement, and I'm above my variable high volume node. This structure out here is an auction, and it's like, I'm not paying that. Oh, but it's on sale. I'm not paying that. Yeah, but it's great. Here's the high volume node down here. This is now too low. So I got above it, and now I'm coming back. And I don't know where this is, remember. So sellers, I get my buyers. Right here, I'm clueless. This was too high. Come back. Sellers. Sorry guys, I'm trying to find where I got long here. 950. Oh, actually, I got long over here. Pretty lucky, I guess. So I got long here, right here. I see the sellers. I see the buyers above. This is micro high volume structure. Actually, I thought I got in it. And this here is absorption. I have absorption. I have micro high volume, and I'm waiting here. So I don't, it'd be so nice to buy here, but I can't tell yet. I get my buyers here. Now, right here, I have absorption. I have micro high volume. You can see it there. I'm not saying anybody should do this. I have absorption here. Now, I don't know until after the fact. These sellers, why didn't the market keep going down? Because there's a passive side absorbing them. This is here. It disturbs me. They pull. That opens the hatch. So this was my long, and I'm going back here. Mean reversion. Okay, so that was a long for me. Mean reversion back here. Then I'm looking for, watch. Now this, it has to clear this. Has to clear this. VWAP to VPOC. This is also a TraderLab trade right here. Oh, there you go. That's all I can say about the longs. VWAP to VPOC, structured trade. VWAP to VPOC, structured trade. Longs, subject to your plan, long. Where are we going? Here, structured trading, TraderLab process. Everything is random, not a recommendation. Let me ask you a question. Do you have a trade plan? Do you know where you might interact with the market? These are structured trades. So if this is not your skill set, and I have to tell you, it's my least favorite condition to operate in. It truly is. I like to throw a shoe at the monitor because it's very easy, like to get long here, take a stop. You could really do damage to yourself in mean reversion. It's really, but you have to kind of think of things in the full sequence of it. Yesterday's low, our target from Thursday, ETH low is here. That's what I know. I don't know anything else. I know this was a target coming up. I know this was my target coming up. And if I get through here, I got 64 on the hip parade. This is what I know. So all I can do today, unless it's in my plan to trade shorts, is to trade longs. It's kind of like, what are the participants telling us about the perception of valuation? They're saying that at the moment, and this is all subject to change, Thursday's low is too low. As long as I know Thursday's low is too low, I want to try to get long. And because rotations are random, I never know where, is it going to stop here or go down and take this out? How about we don't know that? Write this down. The outcome of any trade is random. The business model is gaming, which means casinos. How do casinos operate? They only play games that have a statistical edge. The cards coming out of the deck are random, and the way the gamblers play cards are random. So it's a random environment. It's as close as we can get to our environment. This is all random. The rotations, participant behavior. Who sold this? I don't know. Made it go down. What happened here? Icebergs are in here. Buy stops, selling iceberg, absorption. That's what's in here. Different participants, different agendas. They impact the market. What happens over here? Buying iceberg, 658 into the 358 stops. Sellers up there, buyers up here. Different participants, different agendas. We cannot predict when, if, how, any other participant, what they'll do, when they'll do it. Everybody's doing their own thing, right? Well, what's our thing? Well, in TraderLab, our thing is only interacting with the participants with vetted, structured trades that have a statistical edge. Blackjack has a statistical edge. No way to know what's going to happen on any specific hand, and for us, on any specific trade. If you approach the business of trading that way, you're going to have a different experience. You're still going to experience the emotions. You're still going to experience the losses. By the way, how do casinos experience losses? Overhead, cost of production. How do we experience losses? Personal failure, a tragedy. Well, I'm going to suggest if you're in business, you do pay bills. Yet the casinos pay the gamblers, pay for the cocktails, give you a ticket to the buffet, and if you leave enough dollars with them, they may comp your hotel, send you a bottle of champagne, gift basket, fruit bowl, and tickets to Adele. That's what casinos do, and they still make a big profit. And the reason they can do it is because they have anchored inputs, not variable inputs, and they only play games that have a statistical edge. They're not making it up. So in the TraderLab, I posted about trade management. When do you decide how you're going to manage this trade? If you're long. Not here. It's all done before. Then you come here and you just do what you have found gives you an overall edge over a large sample size of interactions in randomness. Because look at these sellers here. And where do we come back? VWAP. And where does the market tend to go? Here. This is mean reversion in a fractal. So this is along to here. Now, you have to have enough range for this, you see. And range isn't from where you see this. It's where you execute to your scale, which is here. Now, here's what might happen. We're in two-sided trade. Outside, in. Now, if we can't get above here, we're just going to come down here. If we can get above here, we can come out somewhere to an outside edge and maybe come back here. Or, remember our statistics, get through here. This is very important what happens here if it happens. Any questions? I'll now come up for oxygen. Thanks for your patience. Remember, if you're visiting TraderLab, the TraderLab community chat is available to everyone at no cost. There's guidance. It's a community of serious traders looking to build a business of trading and collaborate because there's a lot of work. And if we can work together, we can make it better and we can leverage. So you're not sitting there doing it all in a vacuum. You need a community in this business because this business is not easy because we can go down so many dead ends. I have gone down so many dead ends. I can't remember. With all the aha moments along the way that said, this is it now, I got it figured out, and then not so much because I'm really was curve fitting in many different facets of my process. And this is going back, I've been trading going on 45 years. So I'm talking about, I started in 1980. So I've had a lot of time to do a lot of things. And most of those things they always say, well, experience is good. Yeah, but not getting past and keep repeating something, trying to fix a process that's not in alignment with the business is a problem. And here's the other part of it. We, as gamblers, walk out with winning, right? I mean, think about it. You could just throw a dart. The monkeys did it in 1987. The monkeys, they had monkeys, and they took the monkeys, and the monkeys outperformed the advisors in 1987. It was published in the Wall Street Journal, I think. And then there was the Beardstown ladies, Beardstown, Maryland. They had like a coffee clutch, and they would pick stocks. They got written up in the Wall Street Journal. What does that tell you? Nothing wrong, by the way, with the coffee clock and all that. It's just that everybody is profitable at times. Every trade works at times. That is the random component, and that can keep you going down a path that has no edge. And I know it's a fallacy, but let's say this VWAP to VPOC. In certain conditions, it is not qualified. Yet there are traders that are going to see VWAP to VPOC and they're going to go, oh, I'm going to take it because it works. It's not vetted in the right context. It's going to fail statistically. It'll still work sometimes. You see, that's the problem. We see something work and it has maybe no edge, but we'll believe it has an edge because we observe it. Our mind is looking for certainty and predictability. Well, even with an edge, it doesn't mean it's going to work, but you may find under certain conditions, this specific trade fails 70% of the time, but works 30%. Your brain's going to remember the 30%, even though over time you lose money with it. I can assure you, if you actually knew the difference, you wouldn't trade it if it had a statistically negative edge. Does that make sense? CVD. Yeah, I'm getting a question about CVD. CVD is the chart, I call it's chart volume delta. So I'm not concerned about the whole day's delta, which right now is negative. What is that? That just means overall for the day, there was more aggressive sellers than there were aggressive buyers. Now, here's the question for you. Were those aggressive sellers sell stops or shorts? Different. So it's not important to me, generally speaking. The CVD, what it does is chart volume delta, like chart volume profile, only shows me the volume and the delta that is visible to me on the chart. So if I am zooming in to just something really minimal, this is showing me where the high volume is, which is there. Outside edge, I'm not paying that. Outside edge, it's on sale. Right here, the delta is showing me where the buyers are, the aggressors are on the top, and the selling aggressors are on the bottom. What does that tell me? These selling aggressors were absorbed. They're under the bus. These buying aggressors up here are currently under the bus. I'm in two-sided trade, both sides, and then we're doing this. So it's kind of a dividing line, and the dividing line is this high volume area. So I have buyers up here. They're not having a good time at the moment. And I got sellers under here. They're not having such a good time. And we're sloshing. So it's pretty much a neutral condition at the moment. And that's called balance. And that's called mean reversion. Outside in. Outside in. And what's the context overall? Up. Doesn't mean we won't come down lower and take out the stops under here. The stops under here. The thing about mean reversion that makes it mean is that both sides can easily get abused. And that's why this is a good trade. I like this one. This one here to there. This one to here. But we're not getting above it. And we didn't clear this. So this presents a problem. So now you got to think a little differently. Of course, this is important, and we'll come back to that maybe sometime during the day or never. Doesn't have to, remember. So stops are here and here. This is pretty much a double bottom. Double bottoms are not strong structures. They are exhaustive structures. There are stops sitting under here. If we get down here and the mid is here, we can come out here. So, and that aligns with this outside edge, which is what's called the low volume node. So I know, not what will happen. I know the current condition is this. That means both sides have equal opportunity to get abused. Stops are above here, the shorts. The longs have their stops under here. The context favors the longs, but the market goes up write this down. The market goes up to go down. The market goes down to go up. So if we come under here, and I don't know, we can take these guys out. Then the longs are out. If we come under here somewhere, and we don't have to, because this is a long in the TraderLab. I just have to tell you, if you're long, you got to be scaled here. And then you're going for this. If you get taken out, you would scratch, and then you'd be looking for another long to come back here. This is already what I know in the trade plan. I know this is too high. I have to clear it. I know I've got buy stops out at these swings, which is fuel, and I've got sell stops under here. That's what I know. I don't know anything else, except I want to be long from somewhere. Does everybody see the rationale behind the idea of being long? And these are structured trades. So these are longs in TraderLab. And this is the mean. So this is mean reversion. So the idea is to come here and get risk neutral, and your stop goes under here. That's pretty much this trade. That's all it is. And then we either going to take this out and get lower to come back in. So the next trade, if this is out, subject to you having a structured, vetted trade plan, would be to get long to come back here. I already know the next trade. This comes out, scratch the long, or take a burger off the table and some fries, come out, come back. Or this holds, come out, come back, or come out, go and come back, or come out, go and don't come back. You know, all that's possible. But that's right now we're living in this world. Is everybody following? Is this making some sense? Why? And by the way, if you're interested in this, there is a link in the bottom of YouTube. There is no cost to become part of the TraderLab community. There's 60 PDFs of these structured trades you can download, reverse engineer, and adjust them to your fractal or time frame. Here's the thing. There are some traders who are just going to trade here to here. That's it. They are in the scalpeteria using this process. And they might, if this has a high probability edge, just trade from here to here with as many contracts as they think is, material. Other traders are going to take the same trade, scale here, keep their stop under here, and they're going to be going for this high probability target, which is around 70%. Now, remember, the issue is this was our target also. So we have confluence. I got to get through this to go north. If I just pop, come in, I'm coming back here. We already know that. That trade is called the IB failure. So write these down. We have VWAP to VPOC longs. Target is the IB high, call it 58. If we come out 58 and fail, then it's going to be a short called the IB failure back to here. And then maybe all the way down here. Or, all the ors are, or we come down here first, then you'd be getting long to come back here to come up there. So these are all the trades. Now, the thing about it is we just sit back and have to let it ferment. There's no way to know. Now, I think this is a weak structure. My sense is, from my experience, this will get taken out. But it doesn't have to do it this time. Every moment's unique. So if we don't come back here, it's showing really pretty good strength. But there's sell stops under these swings. You got to be thinking, where's the fuel? It is here. So I'm extremely wary of the longs from here. But my job is to put the trade on and get risk neutral. I'm in alignment with the context. I have structured trades here. Same trades over here and here. So there and there are longs there. Now it's just like, what's next, Lewis? And it's like, I don't know. Do you know what's going to happen next? If you do, look me up. I don't know what's going to happen. That's the strength of knowing you don't know, allows your mind to be open to change. The other part of it is, if this gets taken out, you're going to see stops. I want to see the stops if it comes under here, because my trade plan is looking for the same thing. Outside, in, back to here. Outside, in, back to here. Didn't get taken out there. Nothing here. This is midair. Outside, in, back to there. Has to clear this, right? Where is it? There. See the level? Auction. It's got to clear there. If I can't get above there, then here. And if I fall out, then maybe here and down. So I know that. So I'm just sitting. I have nothing else I can do. I have to follow my plan looking for that. That's my plan. That's TraderLab. By the way, trading is patience. It's not action. Now, here's the thing. When I talk about trading in fractals, you guys think of time frame. I don't use time because the structures are not created by 5 minutes, 1 minute, 30 seconds. They're created by the participant behavior. That's what creates this, not me, not the clock. Here's micro high volume structure. There's my seller. Let's look at the behavior. It's right there. I'm not paying that. There's a selling absorption right there. Sellers, buyers take a shot. Where do we come back? Here, here, here. So I have to get above this to go higher at the moment, right there. This area, okay? No precision. If you understand how the market works, you would know this. If you're in TraderLab, you would know this. Now, you don't know what'll happen, but would it help you to know that this right here, right there, is too high? Right there. I'm going to put a line there just to help you see what I'm looking at. And this is what the auction is about. This is what auction market theory is, because the market is really based on the participant behavior, not an indicator. I don't use them. Why would I use an indicator? First of all, they're not real time. The other part is they're random. They don't understand the condition of the market. They're just going to give you what? Buy, sell, and where? Does it tell you to get short here? Well, I'm getting long here. Does it tell you this is an obstacle? I'm scaling here. Does it tell you that this is an obstacle? If I don't clear this, then what's my possibility? This. Do you know that? Now, remember, you can know it, but it doesn't mean it'll do it. But is it better to be informed about the possibilities? Is it important to think about how the market works? The market goes up to go down. It goes down to go up. The market goes up to go down. It goes down to go up, hitting head on ceiling. It goes down to go up, and it goes up, hitting head on ceiling to go down. If I get through this, I've got that, and then I have this, and I have this, and whatever, right? Right now, we're in this world. So this is Tom's world, not my world, really. It's just an auction. If you understand how the market works, it's going to give you, I think, and you have to vet this for yourself, an advantage over other retail traders. And they're our primary competition in this business. They make up about 20% of the volume. When the higher time frame participants come in, the hedge funds, the market makers, other participants, we can get outsized rotations. If you understand how the market works in all fractals and all time frames, you can participate in these outsized moves. And if you follow the stream, you'll see the same processes at work. The variables become the range, not the process. So the process of long from here to here, if this range was, instead of 3 or 4 points, was 12 points, guess what? Same. If you understand how the market works, all you're going to be adjusting is where your scales are, subject to a vetted trade plan, and your targeting. That's it. Everything's the same. So the bigger the rotations get, the more opportunity, and the risk stays fairly constant unless the chop or the short-term volatility increases. Then you might need to adjust, and that's part of vetting a trade plan. But primarily what we're doing here is this to this, this to this, this to this. If I get through this, I go up there. And the way I do this is if this, then that. If not, if I can't get through there, then what? Then here. If I come through here, then what? Weak, low, weak. So we're going to watch this. The auction suggests to me at the moment this is too high, and I know where the stops are. If I come down here, then where am I headed? Does this make sense? Please give a thumb up, by the way, if you're getting some value from this. This is the TraderLab. This is what the group of traders in the TraderLab are working on. Plus, you bring your own stuff, you know. But what I have found is I used to be for everything but I mean many years ago, I built trading systems, and I shared an office with George Lane. He created stochastics so early on with oscillators, and I thought the Holy Grail showed up. Little did I know. Why might I think this is too high? Because that's what the participants told me. Why might I think that we would take this out? Because that's where the stops are. Why might I think that I might want to be stalking along? Not a recommendation. Where's the stops? Mid, VWAP. We got the VWAP. Now we want to see what happens. Not a trade recommendation. Remember the challenge. Too high? Question mark. Now what? Fractal? Too high? Too high? Too high? Stops. Stops. Does everybody see why I was indicating potential? I can't predict anything. So, I can't, wouldn't it be so nice I can pull rabbits out of the hat? Then I'd be named David Copperfield, not Tom B. But what I can do is I understand how the market works. I don't know what it'll do. So what did we do here? We took stops under here. And where could we go? Mid. But what is this set up? Now, right here, and we have an iceberg who wants to buy here. What is this? Sellers. Here's my stops coming out. That's what we were thinking. What do? Micro high volume right there. And what are we doing? Mean reverting. Now, it doesn't mean anything, but this is where we might go. Now, this is very tricky. This is, again, my least favorite condition because sellers are here. This is the high volume. I need to wait for a retracement and see what happens here. Watch this volume here. Right here, we need to see it reject to the upside, and it's not a buy recommendation. Remember, we got these icebergs wanting to buy. Look where they're trying to buy. Do they lift? We want to see what the icebergs do. This is micro high volume structure. This is an area to lean on, not a trade recommendation. This is your target, right? Let's watch it together. Guys, and I don't call trades because you might be shocked to hear this. I take stops like the rest of us. Why do I do that? Because that's trading. So let's watch. So right here, we have sellers. I need buyers. Now, this is not exactly, this is not good buying here. So this here, we got to see how. Now, remember, this here is material. So we want to watch the behavior. What I'm saying is, if you did get long, the discipline is to wait to get long here, and your stop will be right here. Not a recommendation. I think there's a good chance to get taken out, but you need to see buyers. I'm not seeing any volume here. You need to see buying volume. Not seeing it, okay? But let's just see what it does. These are not trade recommendations. What this trade has is the potential to go here. If it falls under here, then you got the mid. I'm seeing more selling. So that is not, as they say, suggesting north by northwest. Let's watch the behavior right here. There's absorption, stops, let me take a look around here, make sure there aren't too many body parts here on the screen. And what do I got here? Nothing so far. In other words, but I did want to show you this because this was absorption here. There's your rotation. This would be a potential, but I had no buying here. You see, that's a problem. Now let's watch this. Sellers were absorbed, buying icebergs. This also can be a potential long. Now you see the green bubbles? So I have aggressors now. So let's see if the difference, if anything, and these are not trade recommendations. Let's see if there's difference in behavior now. So here, I did not see the green bubbles. I mean, this guy got stuck here. I get my pullback. I have no aggressors here. I pull back again. Where's my buyer? Which if you replay this, and this is available to everybody, you heard my comment. I had the iceberg under here, which also was suggesting we might go down and fill him. Here he gets filled. Here's the absorption. Now what I want to see now is I want to see this state not get taken out. Now we can still come down here. You know, anything is possible. Let's just watch. These are not trade recommendations. This is very hard and very annoying. So we'll watch this together. This is TraderLab. This is the target. And it has enough range. Okay? So we'll see. This is mean reversion, and I want to underline the word mean. We still have the mid here. And if we take this out, then we can certainly get down to the mid. I'd be on the same trade from a different location. So for me, I really got to get good entries and tight stops and be willing to get abused because we don't call mean reversion mean for nothing. So we're looking for this, not a recommendation. I'm still seeing my selling. Now I need to get over this to have a shot at this. Watch. This is TraderLab. Now I'm not saying this trade's any good because I don't have any idea. Not my job. If I could pick out the ones that are going to work, I'd stick with those. This is what's called the auction, you see. So the auction is really out. This is what's called mean reversion. So this long, the scale is right ahead of this. And then you are hoping, underline, to come through here. This is your resistance. Okay. So you got your support here, right here. And this is your mean. So the goal is to come here. Right above here, you have stops. So the idea is to come above this swing and get here or not, you know, who knows. But this is what mean reversion is, stressing the word mean. And this is kind of, when I talk about these 60 PDFs, they look like this. And they're available to everyone in the Bookmap Discord TraderLab community, along with the statistics I quote every morning and an understanding of market mechanics. So all of these, and I'm not a vendor. There's no cost for any of this or the TraderLab chat or the community. I don't think there's a better group anywhere of serious traders. It's not romper room. It's not a trade calling room. It's a total waste of time for you to be in somebody's environment where they call trades because that's not you. You got to find what works for you. And I always think of it like dancing, like a dancing partner. You know, you just get that rhythm. And the rhythm is about the fractal or the rotations you operate in. So let's watch this here. This is support. This right here. And are we going to come up here? Or are we going to now take these guys out and come to mid? That's the trade. It's either here to there or here and not so much and take everybody out under here. That is what's mean about mean reversion. So you just have to kind of decide, do you have an edge in mean reversion? I find for me, it's my least favorite condition. I take more trades, and it is because I'm like here. If I'm trying to get here, I'm trying to get to here. If I get this taken out, very tight stops, I'm trying to get to here. It's the same trade. If it doesn't work, it comes out, and you're coming down here. And I can take, quite frankly, I take as many stops, maybe more than others do. It's all fractal and time frame. Here's the other piece about this. If you're in a higher time frame, your stop might be down here someplace, and you're just hanging out and you're going, enjoy yourself, everybody. This is like slap yourself with a cream pie about 10 times. Hopefully it's a cream pie and not a 2x4. And you're just getting this. So you can take a lot of stops in this condition because where's the outside edge? And that's the thing about mean reversion. And guys, in the TraderLab, this condition is a separate trade plan. See what it tends to do? This is where the absorption was. You got to be under here. Not here. Under. Because that's where the sellers got trapped. Notice where the delta is here. I know I was getting a question about CVD. Well, here, see this red? This is here. That's the sellers. They got stuck. If I come back, and there's the absorption. That's an iceberg was buying in here. Passive side. So your stop has to be under here. Now, it is not unrealistic, as I already had mentioned, that we're going to take this out and get the guys at the mid. All you would be doing then is either you'd be taking you have a tight stop, you'd be taking a loss, and if that needs to be okay because that's trading. And then it's how far out. If you can't get back here, then here. That's the next location. That's the mean reversion. So I thought we had a pretty good shot over here. But as they say, no bueno. And if you guys are interested in TraderLab, the link in the bottom of YouTube will take you over to TraderLab. Say hi. Download the 60 PDFs of structured trades. This is another one here. We're looking for the stops to come out. And this is our outside edge of this distribution. It's out here. The market, let me look a little further down the food chain here. Out in here might be where this may come or whatever. The caveat to all of this is this was a target. So are we going to come up here is the question. Probability suggests yes, but auction says too high. This is a conflicted area. But everything statistically suggests higher, but that might be done. No clue. So we'll just see how this goes. Higher time frame trend is up. Intermediate time frame trend is up. But this is resistance. There's, as they say, the fly in the ointment. So you have choices. You can keep taking longs, trying to get back here, mean reversion, looking for the statistic. And so there's nice range to try to get up here. There's about a 70% probability we're going to test that. So it is possible to come all the way across this range, take out the shorts, and then the question becomes continue or fail and fall back inside. Remember, we have those two trades already lined up. Mean reversion outside to here, to there, failure, back to there, so short to there, or through the top and don't look back, which actually would put us to here for the next target. So it's out the top to there, or just out the top, back to there, out here, back to here, or none of the above. That's TraderLab. And the business of trading is not predicting. It's already knowing, as I'm sharing with you right here, what might happen and where. Then it's what happens. And it either does or doesn't. And they're not, the locations are auction based, which means they're slop. So if we could come here, we could come out only to here. We may come out to here. We might come out to here. So you're saying, well, what good is that? It's no good to predict. It is good to anticipate. And then you're going to look at behavior. Where am I? I'm at an outside edge of this distribution. I'm at the mid. I'm seeing absorption. If I get long here, I've got to, my next area would be VWAP and then VPOC, not a trade recommendation. Let's see what it does. And this is resistance. So if I'm getting long, and that's not a trade recommendation, I'm just saying, I'm looking here. And if I can clear this and this, then I'm looking here. Then I'm back in mean reversion. Hard trading, Questions, final questions. Remember, please give a thumb up if you're visiting in YouTube. Visit the TraderLab, take advantage of TraderLab resources. We want to see how far out this thing will come, and there's no way to know. Very hard to trade. We know there's stops at the mid. And the other thing we know about the mid is we get mechanical buyers at the mid. So we want this. We want to see us come out. Let's just watch. So this kind of thing here. Do we have a trigger here? Let's just look at it. I want to show you why we don't have a trigger. We have the absorption. Here's your high volume. Here's your buyer. Here's your pullback. There's nothing here. So there is no long. Now we're coming back outside again. Let's see. Overnight volume point of control, 3750, is right here. Retail in the ETH was here. Let's watch this area here. Not a recommendation. I've got 1 minute left. Please drop your questions in YouTube. Please give a thumb up in YouTube. If you're in YouTube and visiting the TraderLab, thanks for visiting. Watch this level right here. To here, not a trade recommendation. It's so easy to get abused here. So if you took a long here, you got to scale ahead of this and here, or just ahead of this. These are terrible because I don't like them. It's amazing. You can have a trade plan and you can say, I don't like this. But you just got to kind of follow your plan. And if you know where your trades are going to show up, like here, then you're looking at the location. Absorption, sellers going to zero, Lewis. Buyers here. Liquidity comes in the book, right? And then you're going to look at behavior. It's very difficult. Where are we going? Here. This is TraderLab. Not a recommendation. Everybody's clueless, especially me. And why am I clueless? Because I'm flexible. So I have no opinion. I just have a plan. And I understand market mechanics, how it works, why it does what it does, and how at times, underlined, I might get an alignment. So this is my scale. It's the mid. Why would I scale at the mid? If participants think the market's going down, they're going to use the mid to sell. Retail traders. Now, they may be 1,000% right. I mean, the gamblers walk out, they win. I'm trying to play the edge. So my edge is over a random sample size of interactions with the other participants. They win, I win. You know, sometimes they win more than I do, and other times I win more than them. The idea is over time, I'm extracting dollars from them more than they extract dollars from me because I have a statistical edge, just like the casinos do. Doesn't mean this trade is doesn't mean anything. It's just shuffle the deck, deal the cards, and over time, if I have an edge, the edge plays out. Is it going to be this time? No idea. Where might I scale ahead of this? Why? Because I anticipate retail sellers at the mid. I anticipate buy stops at the mid. If I can get back to the mid, I anticipate selling. So I need to be scaling and getting risk neutral. This is subject to trade plan. Is it a fixed scale to cover the range from entry to stop? And now you're sitting here with your stop under this structure. The worst that happens is your broker sends you a gift basket because you get taken out, or you hold and you're scaling ahead of here because you're anticipating a potential return. This is the unknown and the variables. If I get through here, I go here. That's what I know. If I get through here, I go there. That's what I know. Maybe. If I get through here, I go there. That's what I know. Or none of the above, which means I don't know. Hope you got something out of this. Appreciate you all visiting the TraderLab. Click the link in the bottom of YouTube if you want to take advantage of TraderLab, the community. There is no cost. Download the 60 PDFs of structured trades so you can pick one and reverse engineer it and prove to yourself that you can execute a statistically vetted trade plan, deal with the emotional aspects of randomness, and determine where your edge lies and stay away from where you don't have an edge. There's a library of webinars and, of course, the TraderLab community. Thanks for visiting today. Please give a thumb up in YouTube. And remember, these streams are available exclusively to Bookmap Discord TraderLab participants, as well as the TraderLab Discord server and the Bookmap server, where you can get additional educations on a high-tier tool like Bookmap, how to use order flow, stocks, options, crypto, options, behavior, market maker behavior, algorithmic behavior, and a lot more. Thanks again, guys. Thumb up, and thank you so much for visiting TraderLab. Look forward to seeing you soon.